Looking at the long-term trends, you can certainly see that inflation is cooling, and you can see a slowdown across the economy. When you look over the last month, there have been a couple reports, though, that have showed resilience across various economic sectors. At the beginning of the month, we had the Employment Situation Report, which showed payroll growth above forecast. Last week's retail sales numbers show consumer spending and demand at some of the highest levels in years. This is not at all what the Fed wants to see, right? They don't want to see elevated payroll growth. They don't want to see high consumer spending or expansion across business and manufacturing because this puts upward pressure on inflation. Right? They want to see the last year and a half of rate hikes and restrictive monetary policy is working to push down inflation and slow the economy. Now, this week was rather devoid of any kind of major market moves, although there was a lot of intraday volatility. Monday and then again on Friday, there was some manufacturing and servicing data, which came in, unfortunately, well above forecast. On Wednesday, UK core inflation definitely exceeded expectations. We're dealing with some high inflation over there, which certainly impacts our bond market and mortgage rates here. Now, we did get a bit of reprieve on Thursday through the Philly Fed Index as the gauge of business activity, so that was certainly good. And really, if you look over the week, there wasn't a lot of volatility with rates. Yes, intraday, but Monday through Friday, rates were fairly flat. Now, next week brings us PCE. This is the personal consumption expenditure. This is the Fed's favorite inflation metric. And while not as big of a market mover compared to CPI, as CPI comes out 2 weeks earlier, that's the Consumer Price Index, PCE should set the tone for the next Fed meeting on May 2nd and 3rd, where they are expected to announce another 25 bip increase to the federal funds rate. Remember, this is not mortgage rates. You have any questions at all about these headlines, about these rate trends, or if you're curious how they impact your purchase power, definitely give me a call. This is Billy.Saylor, your mortgage professor, 571-330-5884. Have a great week.